In terms of earnings per share for the fourth quarter, that's a 13-cent miss here. So coming in at $1.05, $1.18 was expected. Scott, you might find this interesting. Remember that Alphabet was late to make cuts to its workforce. And last quarter, Sundar Pichai, the CEO, told us that he would hire maybe 6,000 employees. They added about 3,000 employees in the fourth quarter. So that is less than he telegraphed, but they're still adding employees. So on the call, investors may be looking for some more efficiency measures. Let me break down a few more businesses. Cloud revenue, that is a miss also, coming in at about $7.3 billion. 7.4 was expected. That's probably not a surprise given the weakness that we saw at Microsoft and Amazon. Google, of course, being the third hyperscaler. YouTube, this is also very important, and that's a significant miss. The street was looking for $8.25 billion. That's coming in at $7.96 billion. And I believe, Scott, that would be its second straight quarter of year-over-year decline in that unit. But remember, YouTube is more vulnerable to the ad market slowdown than the main search advertising business. We'll continue to go through this and bring you what we find.
I'm looking at the ad revenue, which we know is slowing. I mean, the environment is what it is. $60.4 billion was the expectation, which was going to be down 1.3% year on year, which was only the second ad sales decline since going public for Google. I see a number 5904. So it's a little bit lighter than even some of the, estimates were, taking into consideration, Dee, where this market is from a macro standpoint.
At the same time, the stock isn't moving in the after hours. It's flat at the moment. I should say it has been moving, but not by a lot, considering that it was up more than 7% in the session. And we know that both Amazon and Alphabet have seen huge gains so far this year. So the reaction from the market, I would say, is pretty muted, considering that these are disappointing results, but they're not hugely disappointing. So a lot of this has been baked in.
Yeah, and a lot can still happen, as we've learned our lesson over the reporting periods over the last handful of years. Dee, thank you. We'll see you again soon. Sarat, you got Google, Alpha.
And I think it'll be very interesting to see, because they already announced the cuts. They're hiring. What are they going to do? Kind of like we go back to the Facebook or the Meta playbook. How are you going to get operational efficiency? It's a really high margin company, but there's a lot of costs out of this too. So I think the offset of, do we get costs out, but we also, how do we get revenue in the cloud and YouTube? And if those two don't do kind of what people are expecting, I think the stock's not going to go anywhere, at least for the next couple of quarters.
I mean, this is another area of key growth. You're Amazon and AWS, you're chasing Microsoft and Azure, and the growth obviously has been huge. It's just how fast can they close the gap to those
forward estimates, but it also has rallied 21%. Really exciting about this.
What could it be, right? I mean, you've been talking with Insta. And I mean, I don't need to tell you what the stock did today. Hello. I mean, and the pickup on Reels has been pretty significant.
Well, but it also, going into the quarter, was trading at 13.4 times forward estimates. So it was the cheapest of the FANG. The expectations were the lowest. And expenses. As soon as I saw those expense numbers cut, that I knew the stock was going to do well. Not 22% well, but I thought for sure that's a sigh of relief.
I got Starbucks out too. Pippa Stevens has that for us. SBUX. Pips, what do we see?
Hey, Scott. Well, it's a top and bottom line miss here for Starbucks. Earnings coming in at 75 cents per share on an adjusted basis. That is 2 cents short of estimates. Revenue at $8.71 billion, again short of the $8.78 billion. But it really is that global same-store sales miss that is weighing on the stock here, sending